So in some of my previous videos, I've taken a look at this. This is a chart of gold. It's a weekly chart, and I've got the 200-week moving average on the chart here. You can see here this was the baby bull. We managed to poke above this 200-week moving average briefly, but then after the elections, we came back down. This moving average was just still dropping a little too steeply for this to just break above this and run. As I've been saying, it's gonna take a while to flatten this out and then turn this long-term moving average back up. But so far this year, even though we've been stuck in this basing pattern, gold has dropped below that major moving average a couple times, but just briefly. And for the most part, it has been holding above that 200-week moving average, and it has flattened that moving average out. And based on the action yesterday, I tend to believe we've probably got the final intermediate cycle low in place. And you can see here gold has pretty much bottomed right on that 200-week moving average. And as I said in my last video, I think this is the next intermediate cycle into early 2018 is going to be the one where we finally break out of this basing pattern. Now we've got some resistance here in the 1400 to 1450 level. So I don't know that we're gonna get this huge rocket launch up to 1500 or 1550 during this intermediate cycle. That might be asking too much. That would be quite a stretch above this 200-week moving average to get up to this level, but it would not be a stretch for gold to make it to 1400 or 1450 between now and, let's say, maybe April. That would give us about 3 to 4 months for the intermediate cycle to rally, and that's about normal during a new bull market. That's about the normal duration of an intermediate rally before you get some kind of pullback. So I think this was probably the bottomed right here on this 200-week moving average. And here's the chart of GDX, the major gold mining stocks ETF. And the chart is even a little more clear here on this. Again, you can see here the baby bull broke above that 200-week moving average, but again, moving average just moving down too steeply to break this and run. So it's taking some time to flatten this moving average out, and eventually we'll turn and move higher as we progress into the next bull market. And you can see on the chart here, it looks like we probably got our intermediate cycle low here. Another bounce off of this 200-week moving average, just like these last three. And the basing phase is a little more clear here in the mining stocks. So you can see we've just been stuck all year long in this basing pattern between, say, $25 and $21 on the downside. But again, I think this intermediate rally into the beginning of 2018, I think we're going to break out of this basing pattern here, and this has been a pretty long basing pattern. It's been over a year now, and the longer this basing pattern takes, usually the bigger the move it will generate. So my prediction is we're gonna at least test this baby bull top during the first quarter or first half of 2018, as this new intermediate cycle gets underway. I think we'll at least test this level, and it's even maybe possible that we could reach the $35 level. But again, that would be quite a stretch above the 200-week moving average to get to $35 on GDX. So my expectation is a more realistic target would be between 30 and 32 for this intermediate rally. But that's still a pretty hefty increase in the mining stocks, and it would be a very nice move in the triple leveraged funds. So we took positions, our initial positions, yesterday morning on the hope that the FOMC meeting would be the trigger for the gold cycle to complete its intermediate cycle low, and for the dollar to complete its daily cycle top. So we're positioned right now, not completely positioned, but we have our initial position, and we added to it a little bit on the close. But we are in position for the next intermediate cycle rally, which should occur during the first half of the year. The same as it did here in early 2017 with the rally out of that yearly cycle low, and again here in early 2016 as the mining sector rallied out of that yearly cycle low. So the yearly cycle lows have been coming pretty consistently towards the end of the year. This one, of course, gold has not moved below the July low, so the actual yearly cycle low would be in July, but we've got an intermediate cycle low that's I think is forming here, and I think we're going to get our early spring rally this year, just like we have the last several years.